G'day everybody, John Seville at Acorn Wealth, and this is the Executive Summary for the 30th of June, last day of June, as we head into open range tomorrow. Now, tomorrow is going to be a critical day because we get to see what the open range of July will be, and then of course Thursday and Friday we get to see whether we break higher or lower. Now, keep in mind that Friday is a half day, so volume will be low, and that will affect some of your volume-based indicators, but nevertheless, the break of the open range is what we're looking for. Now, yesterday's executive summary talked about the dead cat bounce. We had that today, bouncing off the 200-day moving average. But it still looks decidedly a downward market, and things are still looking grim. So the shorts that we picked out yesterday all did extremely well today, rallying up into their targets and then closing lower, which is great, of course, for a short. So we won't overwhelm with too many new ones tonight, but certainly there's been a couple that I've been watching that I really like. WFM, Whole Food Markets. Something I really like on the short side, just has that slow and steady wins the race, just keeps dropping. So looking for a break of 39.27 here. Money flows dropping, and looking for a target of 36.60, possibly even lower, and putting using the moving averages here as the stop loss. ASNA, also something that I'm really favourable of. This has got kind of this nice bell curve up the top, just kind of rallied up, rolling over. Money flow has been going down despite the stock going up in price, and you can see just touched on the moving average and rallied up today. So I'd be looking at a short basically at any of these levels. Market didn't make a new low. This stock did. Shows you that it's got a nice downward pressure. So basically anything under 1666, I'd take that as a trade, and I'd be looking for that to drop down to at least this 1553 area. Okay. And LEG also looks half decent. You can see that's just breaking down from its movement. Not as much movement though on this as some of the other ones. We could see a drop down to kind of that 46 level till it hits support. So this wouldn't be one of my favourites, but this is also looking for a bit larger cap stock. There's obviously a fair degree of movement here. A amount of weakness coming in here as it starts to drop. And CRM is the last one. On the short side, we've got a beautiful drop here. We've got insider selling, heavy insider selling actually for the last 6-7 months. It's dropped right out of favour, red all across the screen, and just coming into the trend line support right here. And if we break through 68, well, if we break this trend line basically at 68.36, then it could just be a rapid drop. Again, I'd be using this resistance level as the stop loss. So I'd be looking at a stop loss of basically here at 69.71, and I'd be looking for a break of what are we looking at here? Yeah, 68.33. And so we've got basically $1.40 of risk, and we could literally drop all the way back down to these previous levels down here. So we're looking at basically a potential, what have we got there? About $8. About $8 of potential gain, so really good risk reward if we come down to some of these previous lows. As a first target, we can start to reevaluate it as it fills the gap here around 64. So we're still looking at a $4.30 drop to, that's kind of, let's say 64.11. So yeah, so we still have decent risk reward even to there, but that could drop a lot lower. Okay, on the long side, just to kind of throw the devil's advocate in there, that if we do go higher, here's the two stocks that look interesting. TDW, we've got this interesting pattern where the stock has just, let me just get some other stuff out of the way. Okay, there we go. So you can see we're kind of we're squeezing down, and as we're declining, we've got this nice money flow divergence. So that was quite interesting. And also, if we get in a little bit closer, you can see that we've also got a bit of a contracting range here, which is reminiscent, of course, of a falling wedge. Cooperate. Here we go. Okay, so we just pull that back down a bit. There we go. And then we got the tops here. There we go. So there's a contracting range kind of coming in. It's only slight, but even if it is a downward channel, that's still bullish. So bullish pattern if it's a channel, bullish pattern if it's a falling wedge. Either way, we've also got some support. If we come in and have a look at some of the Fibonacci's and so forth. We've got support coming in here at the $22 mark, which supports kind of the argument that it could just change direction here. So I'd be looking at this as a potential long up to this kind of 26 or 27.51 at the most aggressive. But in terms of the another more short-term target, I'd be looking at this level here, just under 25.93, basically. So that would be my two targets, 25.93 and 27.57. And the entry criteria could be two things. One could be looking at buying the support, which would be anything around 22. So say 22.10, 22 say 13. Looking for a pullback on support, then or playing the break. And if I was playing the break, I'd be looking for a break of the high of 24.08 on that candle. So looking for a break of 24.13. Okay, and the last one on the list is NRP, and this is basically a natural resources company. Again, these are more for playing the devil's advocate as a hedge against the short side of the market, but this has been very resilient, very low price stock, but very, very resilient to all this market's volatility. It's basically just been going sideways, but very strong accumulation on the money flow. So if this can break its overhead moving average at say 389 would be a break, looking at a stop at about 356. This could push up to at least kind of the 430 area. So we're looking at about at least a push of about to 430, yeah, so about 44 cents. So about 44 cents potential. Now, so to get the move right here, so we've got a low here of 361. Yeah, so the tough thing is looking at the risk-reward ratio on that. So that would be the problem. That would be the one downside, is that it's not excellent risk-reward. By the time you're getting in here, the risk-reward ratio is starting to get a little bit thin. So you'd have to want to have some confidence that this was going to continue breaking higher, and but it very well may do. If that does break and it gains moving average support, there could be more potential. But that is the downside to that potential trade, is it's not excellent risk reward. So, but we'll finish up for that for today. Happy trading and good night.